Hi everyone, this is Sam. Today we're about to take a peek behind the financial curtains of one exceptionally excellent Malaysian company, Genting Berhad. Genting was founded in 1965 by a visionary businessman Tan Sri Potong with the dream of building a mountaintop resort in Malaysia, and is now a prominent and well-managed corporation in hospitality, casino, and leisures, not just in Asia but globally. Today, Genting has established itself as a global market leader through its continuing commitment to innovations and efforts to improve. And the focus of our study is the analysis of Genting's capital structures, relevant leverage and profitability ratios, and dividend policy based on the most current financial statements covering the past 3 years. Regarding the capital structure analysis, we will examine Genting capital structure changes over the past 3 years and see what's the internal and external factors that contribute to the changes. We will also calculate the relevant profitability and leverage ratios to evaluate its financial health. This ratio plays an important role in assessing the operational efficiency and risk profile of the company. So moving on, we have this full examinations of Genting Group's dividend policy and the past dividend pays out, and we'll find out how all these dividend decisions affects shareholders' value.
Hi, I'm Chiwei and we'll be talking about the capital structure of Genting Berhad. There are no drastic changes in their total capital from 2020 to 2022. The group's objectives when managing capital are to safeguard the group's ability to continue as a going concern and to maintain an optimal capital structure so as to provide returns for their shareholders and benefits for other stakeholders. So, in order to optimize the capital structure or the capital allocation amongst the group's various businesses, there are many ways the group may do, such as to adjust the amount of dividends paid to the shareholders, return capital to shareholders, issue new shares and warrants, buy back issued shares, take on new debt, or they can sell assets to reduce their debt. The group monitors capital utilization of the basis of gearing ratio. This ratio is calculated as total debt divided by total capital. The total debt is calculated as the sum of total borrowings, which comprise of short-term and long-term borrowings and lease liabilities as shown in the statement of financial position, while the total capital is calculated as the sum of total equity and total debt. The changes in gearing ratio is due to changes in borrowings, which is the debt of Genting Berhad. So now, for the year 2020, the total borrowings of the group increased from 32,130 million ringgits as at 31st of December 2019 to 35,809.9 million ringgits as at 31st of December 2020. The increase was mainly due to the drawdown of existing facilities to ensure that funds are secured for the completion of projects. It increased again to 39,882.4 million ringgits as at 31st December of 2021. The increase was mainly due to the issuance of United States dollar denominated senior notes of 6,293.6 million ringgits, which was partially offset by the early redemption of medium-term notes of 1,250 million ringgits by Genting Malaysia, as well as the repayment of bank borrowings. The gearing ratio of the year 2022 is comparable to the previous year. Their total borrowings actually decreased from 39,882.4 million ringgits to 39,500 to 39,052.7 million ringgits due to early redemption of 1,400 million ringgits of medium-term notes. As you can see from the table, the gearing ratio of the group did not change much and are consistent at around 40 to 43% for the last 3 years, which then proves that Genting Berhad do not have a significant changes in their capital structure.
Hello, I'm Jawan. Today we are looking into the ratio analysis. It's powerful tools for assessing a company financial health. Our focus will lie into two key factors, which are the solvency ratios and also the profitability ratio. Okay, so start with the debt to equity ratio, which is an important solvency measure. It reveals whether a company leans more on borrowed funds or owns capital. A higher ratio signals a potential financial instability, while a lower one will suggest a healthier balance and important for long-term sustainability. Okay, next, shifting to the profitability ratio, we will explore into the EPS, earning per share, which indicating a company ability to generate the profit per share. For investor, a rising EPS will signal a financial strength and also a very attractive investment. After that, for the returns on equity ROE, it is a metric that showcasing how effectively a company use their equity for profit. A higher ROE is favorable and indicating effective use of the shareholders' investment and a potentially robust business. So overall conclusions, this ratio, debt to equity, earning per shares, and also the returns on equity are the essential tools for the assessing a company financial performance. They guide the company's like the strategy decisions by providing the insight into the balance between the debts and the equity and the company profit generating capacity. As we navigate the financial landscape, let's harness into this ratio for informed decision making. Okay, first, debt to equity ratio. Examining the Genting Berhad financial years ending in 2020, 2021, and 2022 reveals outward trends in the debt to equity ratio, which indicating an increasing reliance on the debt for business operations and also their investment. In 2020, the DE ratios was about 0.8274, which reflecting a 82.74% debt financing and a moderate dependence on the debt. Subsequently, the ratio rose to 0.9272 in 2021 and further to 0.9382 in 2022, which signal a growing reliance on the debt. Although the industry norm suggests a good DE ratio should not exceed 2.0, all of the Genting ratios remain below 1.0, which consider is safe. Nevertheless, the upward trend implies a heightened financial risk due to the increased leverage, potentially raising the concerns for the investor about the challenges in the debt repayment. So, the largest debt to equity ratio don't always imply that it's negative. Genting must always carefully assess to the factors like the contributions to the rising debts and also the impacts on the company risk profile and their financial health as well. Thank you. That's all from me. I will pass to next presenter.
Hi, I'm Kai Hong, and I'll continue with earning per share and return on equity ratio. So for information, earning per share offer insight into a company financial performance and its ability to generate profit on a per share basis. So to calculate earning per share, the formula is using net income of the company divided by the number of outstanding common share. According to the chart provided, we can find out that the earning per share of Genting Berhad ongoing a drastic increase from year 2020 to year 2022. This turnaround suggests a potential rebound and enhanced financial health for Genting, attributes to overcoming the adverse effect of COVID-19 pandemic. As the number of common share of Genting Berhad remain constant each year, the increase of EPS earning per share is solely due to the rise of net income. So by applying the earning per share formula, dividing the net income to the total number of outstanding common share, we can conclude that the earning per share was negative 0.71 ringgit Malaysia in year 2020, as the net income was around 2,700 millions negative, and 13 cents in year 2021, as the net income is negative 490 million, and 43 cents in year 2022, and the net income was around 1,600 million. So in summary, Genting Berhad encountered challenge in year 2020 and 2021, evident in the company decline earning per share. Nevertheless, in year 2022, the corporation underwent a significant recovery, showcased by its positive earning per share and strategic adaptations. Next, as for return of equity provide insight into a company's ability to generate return from a shareholder and showcase how change in net income and shareholder equity impact the ratio. To calculate return on equity, the formula are net income divided by the shareholder equity. As demonstrated in the table, return on equity also undergoing a drastic increment, as the primary reason for this rise is the increase in the net income coupled with a decrease in shareholder equity. Genting Berhad recorded the lowest return of equity at negative 5.07% due to the lowest net income of negative 2,700 millions and the highest shareholder equity of 54 millions. Subsequently, the return of equity improved to negative 0.92% in year 2021 as the net income increased to negative 490 millions and decreased in shareholder equity to 53 millions. By 2022, the return of equity also reached its highest value of 3.15% as the net income turned positive to 1,600 millions, whilst the shareholder equity decreased to 52 millions. This upward trend in return of equity suggests a positive financial performance and recovery of Genting Berhad from COVID-19 and the management effort to enhance net income and possibly optimize the capital structure that have positively impact the return of equity.
Hi, my name is Hui Wen. Dividend policy is a set of guidelines determined by a company and will distribute the dividend portion to the shareholders, a means of rewarding shareholders by distributing profit accrued from the preceding or the current year. Shareholders do not only view dividends as a form of regular income, but they recognize dividends as a significant factor to evaluate the company's share. According to the annual report 2020, Genting Berhad disbursed a total dividend of 22 cent per ordinary share. The special single tier dividend 9.5 cent per ordinary share and the final single tier dividend 6.0 cent per ordinary share were announced on February 27, 2020. Consequently, these dividends were distributed on April 9, 2020 and July 27, 2020, while interim single-tier dividend 6.5 cent per ordinary share was announced on August 27, 2020, with the payment executed on October 1, 2020. Genting Berhad continues in determining the initiative to safeguard liquidity and fortify financial resilience in the midst of this COVID-19 period. Despite the unfamiliar environment which affects the economic changes, Genting Berhad is aware about the matter and strives to create a value for the shareholders. Genting Berhad is committed to navigate these challenges effectively by declaring a consistent dividend payouts to shareholders of 15 cents per ordinary share. An interim dividend of 6.5 cent and special single-tier dividend of 8.5 cent per ordinary share is agreed to be paid in 2021. Therefore, the amount of special dividend paid amounts to 365.8 million with an additional 231 million as final dividends was paid in 2020 in respect of the financial year ended December 31st, 2019. Furthermore, interim dividends in the respective financial year 2020 amount to 250.3 million, resulting in a cumulative total of 847.1 million financed by the Genting Berhad. In regards with that, Genting Berhad paid a dividend amount to RM 327.3 million on April 8, 2021. Genting Berhad declared an interim single-tier dividend of 11 cents per ordinary share in 2021. This approach is to ensure that the shareholders are being compensated with dividends despite undergoing this unfavorable economic situation. To make a comparison on that, the annual report stated that the company declared total 15 cents per share in 2020. The reduction in the declaration of dividends from 15 cents to 11 cents per ordinary share observed between 2020 and 2021 may be attributed to various factors. One possible explanation could be fluctuations in probability, with the possibility that Genting Berhad experienced lower earnings in the later financial year, leading to a comparatively reduced distribution of dividends to the shareholders. In 2022, the board declared a total dividend of 16 cents per ordinary share, representing a significant increase to last year's dividend, 11 cents. This increment might be the improvement in overall profits and a better financial performance recorded in the respective financial year. The net income recorded 1,667.2 million in the year of 2022, which is much higher than 460.6 million in 2021. Therefore, in 2022, the board announced 7.0 cents for interim single-tier dividend and 9.0 final single-tier dividend. The company issued payment on the October 6, 2022 and April 20th, 2023 respectively. As per mentioned above, Genting Berhad disbursed payment 423.6 million on April 8, 2022 and interim single-tier dividend of 2022 amounting to 269.5 million with a cumulative total of 693.1 million. The annual report for 3 consecutive years, Genting Berhad has consistently delivered substantial dividends to the shareholders. This commitment in distributing dividends to the shareholders reflects a good insight of the company regarding its stable performance in generating more profits and underscores the company's confidence particularly. With that, the shareholders are able to gain an additional income as their investment. In line with the good performance of Genting Berhad in issuing dividends yearly, the stock price is much more stable even after the economic downturn during the COVID-19 period.
We must learn that every decision the company makes about dividend has a big effect on the value of its share. So in 2021, a challenging year for many out there, Genting decided to pay a total dividends of 11 cents per ordinary share, which is not bad, even though the economy was in the worst slump since the Asian financial crisis in 1997, right? It shows that the company was committed to protect shareholders' value. So meeting and existing shareholders' expectations in dividend payment not only shows that a business is financially strong, but it also boosts investor confidence. Shareholders often see dividends as a stable source of incomes, so a regularly one will make the company's stocks more appealing, especially to investors who are looking for a stable income. As a result, the number of investors could grow more and more and even more. So on top of that, Genting transparent and consistent dividend policy to contribute to shareholder values by creating transparency and predictability. That means when companies pay their dividend on times, they build an image for being trustworthy, which brings in long-term investors who are looking for a less risky investment. However, sometimes company may choose to retain earnings instead of distributing them as dividends because it could be a strategy move that allow reinvestment in internal growth opportunities. Besides that, tax issues also play a role in the effects because capital gains are taxed lower than dividends. So sometimes stakeholders may choose stock appreciations over dividends. For example, if an investor buys Genting share at a lower price and stock goes up in value over time, the capital gain they get when they sell the shares may be taxed at a lower rate than dividend income. Apart from that, economics and market conditions also have a big effects on dividend decisions. One example situation is during a bull market, when investors expect their money to increase in value, lower dividend yield can be accepted. But in a bear market, dividends are very important to keep shareholder profit high, so it can't be too low. So far, Genting Group past record of dividends shows that it can adapt to market volatility and make smart decisions even when the economy is uncertain. In conclusion, Genting Group has maintained a stable capital structure, emphasizing long-term survival and creating an optimal framework for returns. If you look at the number, total borrowing increased from 32 million to 39 million in 2022 because of project funding and note issuances. Meanwhile, the gearing ratio rose from 35% to 43% in 2021, but stabilized at a reassuring 43% in 2022, underlining a commitment to consistency. Shifting focus to leverage and profitability ratios, the debt-to-equity ratio increased from 0.8 to 0.9, indicating a growing dependence on debt. But so far, all ratios remain below 1, so it's considered safe in financial terms. Earning per share, on the other hand, it was 71 cents in 2020, but it dropped to 13 cents after that. But it grew again to a positive 43 cents in 2022, showing a good recovery. While at the same time, the return on equity increased from -5 to a commendable 3.15% in 2022, reflecting improved financial performance. Now turning to the dividend policy, in 2020, Genting faced economic challenges. We all know how destructive is COVID-19, and they distributed a total dividend of 15% per ordinary share, so which is not bad. Okay, moving to 2021, they declare an interim dividend of 11 cents, possibly influenced by fluctuations in profitability. And fast forward to 2022, the improved profit led to the announcement of a total dividend of 16 cents, and Genting net income also rose to an impressive 1,667.2 million. Significant dividends that have been paid over the years are 800 millions, 300 millions in 2021, and 600 million, nearly 700 millions in 2022. So consistent dividend payments show stable performance and contributing to shareholder confidence and stock price stability even when the economy is facing downturn.